The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Well, good afternoon. Okay, so just past 4 p.m. on a Friday.
Yes.
And I don't know about you, but I just feel disheveled after this day. I mean, that was a wild ride, wasn't it?
It was a wild ride. I was just thinking I need to, cool down a bit. It's been a very, very busy day, but look at these markets turning around.
I know. It was so dire when we got on air, after really, bad session on Wall Street, down by 1.8% for the NASDAQ as this higher for longer mantra really set into markets. Down by about 1.7% in the 10 o'clock hour. I was thinking, oh boy, this is going to be bad. And then...
But that was kind of the low, right? And then it started to ratchet higher. And I think a lot of it had to do with the fact that we did actually start to see some buying coming through in Asia, specifically China and Hong Kong. I was just talking to Daniel Hines as well from ANZ about that potentially better looking picture for China and how much that supports mining players too. And when you look at the miners, I mean, they've turned around quite significantly this afternoon.
Yeah, they sure have. You know what else has is energy. And look, it's one of our key three themes today as well, because we will be talking about the BOJ, don't worry. But also we saw the oil price turnaround, and that helped lift some of the energy names, and that's happening off the back of really some news around Russia. So it's such a double-edged sword, right? Because we talk about oil price and it's boosted some sectors and some stocks, but then it also is very inflationary. And that's been one of the key themes from this week as well.
Indeed. Just sticking a little bit with the oil and gas movement though, because I know we've got those strikes settled. I mean, that's good news too for the LNG market. Again, not many analysts were thinking that was really going to rattle things, even though those two plants account for about 7% of total LNG output. But the fact that Chevron and those workers have come to an agreement, also positive news. It means that they will start loading those exports onto the tankers, getting the supply chain going again. But talking about inflation, where you don't really see that, although it is spiking higher than what the BOJ likes, was the Bank of Japan decision.
Yeah, so inflation stayed above the Bank of Japan target for the 17th month in a row, but there wasn't a lot of change coming from the BOJ. Ultra loose policy still in place. I had a conversation with Andrew Tysers from Nomura earlier today, and he said sometimes with the BOJ, it's not what they do, it's what they omit and what they don't do. And look, it doesn't look as if very much really was done here. We might ask Shane Oliver about that one a little later on, because he is one of our big guests today, our guest of the day, I should say, our weekly wrap. Sector-wise, I just, granted, I did this and had to look at this a little bit earlier on, so I'm really curious to see if anything has changed. But, excuse me, interest rate sensitive sectors like the A-REITs, you can see what happened here. It was the worst performing sector.
Yes, indeed. So Stockland down by about 2% there. Interesting, Stuart Roberts, I was talking to him earlier. He really likes the REITs space, thinking it's looking a bit undervalued at the moment. Let's have a look as well at tech, because that's another one that is very much hit hard by those yields. And that was weakness, where you saw a lot of weakness on Wall Street. And we've got Block down 2.5%, WiseTech down by 1.3%.
The retailers, Juliette, also came under pressure, but a bit mixed, more of a mixed picture here, as you can see. There's usually another list that we can look at as well. Guess what? We've got retail sales data next week. And again, just name dropping Andrew Tysers again. He was talking about, the impact that we could see from the FIFA Women's World Cup.
Oh, yeah.
So he said that there might be a few caveats, a few asterisks when it comes to reading this retail next report.
Interesting. I think that had a play into the jobs numbers too. Also, what are we looking at there? Is that utilities or consumer staples? Yeah, so where you're gonna buy your shopping from this weekend. Woolies down by 0.4%. Coles also under pressure. I know you've got Treasury Wine Estates on your mind.
I do, because when I was on air at 10, which seems like a really long time ago, I'll be honest with you, I thought, why is Treasury bouncing? And then I saw in a note that the Global Times, it's a Chinese publication, had been alluding to the fact that we could see a thawing of the trade sanctions really that have been put in place against Aussie wine. So, immediate reaction there with Treasury Wine Estate. I'm also thinking it's Friday, and we should really have a glass of wine in here with us after the week
I think
that
I
was.
need to talk to Kylie about doing this show with a glass of wine on Fridays.
You know what? We're a streaming service. I sort of feel like we could get away with it, Juliet. I don't feel like we're going to get in a lot of trouble.
No. Utilities. Let's have a look at what is happening there. AGL down 0.9%. A little bit mixed there. Contact Energy up by about 1/3 of 1%.
Yeah, and again, just to speak of the big turnaround that we've had through the day today, when we were putting this bulletin together, I don't mind lifting up the hood on what we do around here. I hadn't energy was just barely, as a sector into positive territory. I don't think materials was. So we've now got utilities, industrials, energy, and materials ending this Friday session in positive territory. That's not, potentially what we had expected when the day moved on. And I think it's also worthwhile noting that we are up above the 7,000 level again.
Yes, we were a bit worried that we wouldn't be. Still down 3% over the last 5 days, but unchanged over the year, and that is what matters. What are we seeing in terms of corporate stories? It's about News Corp, isn't it?
Well, yeah, News Corp is there as well. Costa Group accepted that takeover offer. ACL, the deal with Helios, the ACCC wants to have more information. New Hope, I just put that on there because again, the coal miners did pretty well today. New Hope, I'm surprised to see it just flat, but because we saw a lift in the price of coal. But yeah, a lot of it about News Corp. I have a feeling you're a Succession viewer.
So I wasn't, and then people started saying it was the best show ever. And as you know, I had a bit of a sabbatical. I went traveling, and so poor me, had nothing to do for 8 months. Binged it on Netflix, and now I think I'm Succession's biggest fan.
Oh,
so,
really?
I did wonder whether he, and I don't know, only Succession fans are probably going to understand this. Did Rupert Murdoch underline Lachlan's name? Have you seen it?
I'm only up to season 3.
Oh, real fans will understand what I'm talking about there.
Okay, well, let's find out if our 2 guests on the call today are real fans of News Corp. Mark Gardner from MPC Markets and Kevin Robinson from Team Invest.
In the case of News Corp, of course, the earnings per share they've made a few losses in the last 10 years, and the growth is not sort of as steady as we'd like. Their PE at the moment is 42 by our measures, and we look backwards on PE, of course. And the return on equity is below our required 10% and has been for a while. You're right. It has been quite a ride with News Corp over the years, and he's certainly grown an enormous business. I think my own thoughts are that it's a difficult period for them because it was established in the days when broadcast media and newspapers were, really, really strong investments. And that's breaking down now. So it'll be interesting to see what Lachlan does with it.
It may well be a positive in the end. I mean, he's obviously got some pretty strong opinions about things, and they may, which he may or may not be right with. But they're looking at, I think News Corp as a company, they're looking at sort of monetising some AI stuff as well. I think the EU's even looking at, trying to regulate the AI, and if these guys produce their own unique content because they've got journalists, etc. There being royalties going back to media companies and things like that as well. Yep. So that may benefit them. Rising population's always a great benefit to them as well. They're in, as you said, very diversified, digital streaming, newspapers, REA, etc. Yep. Look, for us, these yields at the moment, obviously 10-year yields were up about 15 basis point last night. Yeah. 2-year yields are nearly at like 22-year highs, or they're sitting on 22-year highs. So anything with a high PE we're tending to avoid at the moment. And particularly with, we're not a subscriber to the Goldilocks scenario or the soft landing. So this business is pretty cyclical. So it wouldn't be a buy for us, but
Let's get to Shane Oliver from AMP, who joins us for the final chat of the week. Are you a Succession fan, or more importantly, how did you view what we heard happening with the change there at News Corp? It seems like the market taking it as this has been sort of widely flagged to us.
That's right. Look, I have watched some of Succession. I haven't watched all of it. I've still got some, I think I'm still a few series behind at present. I must admit it is a good series. It's just that I found other ones on Netflix and elsewhere that seemed to distract me. In terms of News Corp, yes, I think it was widely expected. So it didn't really come as a surprise to anybody. And after all, he is 92 years old, so sooner or later it was going to happen. So, yeah, I think it's just going to be business as usual for the time being. But over time, his successors will change things around a little bit. And obviously the environment they're operating in is very different to the one when he built News Corp up over the last 50 years or so.
You're in front of the music section of your library today, Shane. I dare say there might be a book on Murdoch somewhere in that collection, if not now, in the future. Let's leave that.
I think there is actually. I think it's just down that way.
Yeah. The market. Now, I was reading your note, as I always do, and global markets clearly came under pressure this week, including our own. And you reckon that there is still a risk of more significant selling to come. Why?
Several reasons. It's interesting to note the US share market last night went down below its August low. So it's starting to trace out a pattern of lower lows and lower highs from the July high. We're still in a seasonally weak time of the year, which stretches out into about mid-October. So that's obviously a factor. The inflation interest rate story remains a concern. I think inflation is trending down, but we could easily go through a bit of a pause on that front, as we've seen in the last week in Canada and last week in the US and in some other countries, and possibly Australia in the week ahead. And of course, we're getting this sort of signal from central banks that, yes, they may be at the top, but it's going to be higher for longer. And so you're seeing a revision upwards in expectations for interest rates for the next couple of years. And in fact, we pushed out our first rate cut from March next year to June next year for Australia. And of course, that puts upwards pressure on bond yields and therefore has implications for equities via the valuation effect. So I think when you put all of those things together, and this risk of recession is still there, as bond yields go up in the US, you're seeing renewed weakness in housing-related indicators, and that will weigh on the US economy. And we also know that it takes a while for interest rate hikes to show up. I think there's been various estimates that the maximum negative impact from the monetary tightening will occur either late this year or early next year. So those risks are still there. So for all those reasons, I think, yes, there is still more downside risk in the short term. I must admit, we clawed back pretty well today. If you look at the share market, it collapsed at the open. When I last looked a moment ago, it was only down 0.1%. So
I'm just going to interrupt you here, Shane, because now the last of the day's trades have run through. You would not believe it. We're mildly in positive territory.
Wow.
That is amazing. Obviously, value seekers looking for value there. And it is worth pointing out that in our market, I think earlier today, we're in negative territory for the year to date. Whereas when you look at Japanese, European, US shares, they're all still well into positive territory. So in a sense, we have been oversold relative to them. That partly reflects the China risks, which to some degree I think are overdone. And so investors have probably felt, well, maybe there's a bit of value there. And of course, I think US futures, as far as I could recall, were rising through the course of today, even though the lead-in from the US was quite negative.
Yeah, a bit of support in China, Hong Kong too. Just speaking of Asia, I mean, you were talking there about when we see the peak in the rate hiking cycle in, I guess, what we're looking at, the developed countries. Not that Japan is not a developed country, but let's have a look at Japan, which is very much a different picture. When do they start hiking?
Look, I think it's sometime in the next 6 months, or probably around March-ish next year. It gets very confusing, the noise out of Japan. I mean, if you start relaxing your yield curve control, as we know in Australia when that occurred, it is a step on the process towards monetary tightening. They're seeing their inflation numbers. They've come off the boil a little bit, but if you look at the core rate of inflation that I prefer to look at, which is the one excluding food and energy, it was unchanged at 2.7% today for August. So that's running well above their target of 2%. Wages growth has been edging up, but I guess they're still waiting for more signs on that front. But I think within 6 months, probably by March next year, they'll be edging that negative interest rate up into positive territory again.
Well, we're expecting to hear from the governor of the Bank of Japan to put a bit more meat on the bones of that decision in about 15 minutes time. So we'll be keeping our eye out for that over a glass of wine, I dare say. So Shane, when you think about the week to come, I mentioned that we do have retail sales here locally. We do have a monthly inflation read as well. A bit of data coming from China, obviously some from the US as well. Is it sort of the global PMIs ahead of that, though, that are most interesting right now when we need to gauge the data?
To be honest with you, I like to look at those PMIs. I find them quite useful. They told us 6 months or so ago, or 9 months ago, that things weren't as bad, when they started to see that rebound into the end of last year, start of this year. So that was quite important. Lately, they've come off again. Australia was a bit up today. Japan was down, but obviously the US and Europe are going to be worth watching tonight. I think the European one comes out in less than 2 hours' time. So they're certainly worth keeping an eye on, and they have given us a fairly timely guide to what's happening in economies. But obviously next week, it's a little bit quieter in the US. In Australia, we do have those inflation numbers. I get a bit frustrated with the monthly CPI because it bounces around quite a bit, given the measurement issues they still have in that indicator. But obviously it's going to be watched because this is for August, and we know that petrol prices rose something like 9% in August. Unfortunately, it looks like there's a bit more to come in September. So that's going to put upwards pressure on the CPI for the month of August. And I think that the Reserve Bank, though, probably won't get too carried away with the headline number. They'll focus on the underlying numbers. And if they're still edging down, then they'll be reasonably happy. Then we get the retail sales numbers. I think we're going to see a softer number, down around 0.2% rise, but softer than it has been in the previous month, and consistent with retail sales sort of just trending sideways relative to where they were, say, 9 months ago, and consistent with weak retail sales volumes in once you adjust for inflation. And obviously, you also get another round of PMIs in China at the end of next week, initially from the Taishin, and then on the Saturday, for some reason, from the NBS. So all that data is going to be worth looking at. Right now, there seems to be this confusion about the global economy. Is it strong? If you look at the jobless claims last night in the US, they were certainly on the strong side. But you look at other indicators out of the US in the last week, like their own leading indicator, which came out overnight, they're all on the soft side. So a bit of a messy picture there on the US.
All right, Shane, it is Friday. Time to go look at Succession or move down the shelf and get your Rupert Murdoch book out. Thank you, as always, for joining us on ausbiz. Shane Oliver from AMP.
Thanks, Julie.
So Juliet, it's pretty amazing to me that we are closing into positive territory today. So put that in your pipe and smoke it out there. I mean, it was touch and go there to start. So let's take a look at what led this market higher and what we can read into it. So Costa Group, it was on news. So up by 6.5%. It's decided to accept that revised offer, downward, I should say, coming from private equity.
Yeah, that was a $1.5 billion offer, and so that is something that the market did quite like. I think there was a positive broker upgrade as well on that deal, the fact that that accepted that lower offer. Pilbara Minerals seems to be never far from the headlines either. We are seeing this as one of those stocks that continues to be very much in focus with the lithium news. And of course, you've got one of the fundies very much overweight here as well when you look at Pilbara Minerals.
Well, I had a chat today with Argonaut Funds Management, and look, it's in the COB newsletter if you have missed that interview. It's also up online, ausbiz.com.au. But yeah, we had a good chat about lithium. It's always that producer versus explorer. He's sticking with the producers. He actually reckons that there's good value in Pilbara right now, even though the price of lithium has been coming under a bit of pressure. He just doesn't think that it's going to continue in that vein. And so he thinks that this is a pretty good price to pay for Pilbara. Maybe he would have preferred to buy yesterday or the day before when it was one of the worst performers, but good value there. All
right, let's have a look now at the laggards as well. We are seeing IDP Education down by 5.8%, so leading those laggards. Regis Resources, that's an interesting one, down by 3.3%. We were speaking on the trade yesterday to Gary Glover about the gold players. He really likes Regis, saying that he thinks it's a little undervalued. Down 5 cents though today at $1.55. And interesting, I mean, I don't know if you can draw a line there between News Corp and Star Entertainment, but down by 3%.
I couldn't get any worse for Star Entertainment. I mean, yeah, people talk about value. You've got to say that's very, very, very deep value. Getting into that really, really risky territory, 74 cents. So shed about 3% today. I had a chance to look at some of these a little bit earlier on. I'd be curious to see if anything has changed with some of those in the small to mid cap space. Just going by memory, we had Symbio leading some of those smaller names higher today. That's because it did have an improved offer coming through. And elsewhere, if I can recall, just it was sort of a motley crew, as it often is with the laggards. You know, a lot of those in the resource and the exploratory.
A little bit smaller,
space.
All right, there we go.
Oh, there we go.
Up 18%, Queen Pacific up by 11, and then let's just quickly have a look at the laggards in that small. Ooh, how do you say that? Next Gen Energy
It's
Canada.
Next Gen Energy, and so this is an auto feed. I've asked for it to be corrected. Whatever, I can't. Drives me crazy, but I try my best. And Redbubble, okay, so that's off by 8%. I was not really aware of any news associated with it, but I'm just having a little quick search because that's a pretty chunky move. I can't really see, except we did have a change to group CEO remuneration. So we did have the annual report coming through. So some sort of board renewal. So that's probably why.
All right, next week, of course, we were talking, I should say, but let's also have a look at what's going to happen overnight.
I'm not laughing at you. Stifling a cough.
We got a bit
Those
excited.
global PMIs that everyone's talking about.
Got to keep it together for 2 more minutes. Okay, consumer confidence coming through. And look, a lot of the Fed speakers too, after they did signal that higher for longer movement, you've got Cook, you've got Daly, you've got Kashkari, Neil Kashkari, all speaking. And as you mentioned, of course, those PMIs.
Yeah, well, I guess we haven't heard from a lot of them because there's that blackout period before the meeting, and now they'll be doing the rounds.
Yes, and when we look at next week, I mean, we were talking about that as well with Shane Oliver. We've got those retail sales numbers coming through. China, always a key one, industrial profits, how that's going to affect what we're seeing in the commod space as well, and the PMI is always a big one.
Okay, so just to make it official, the last of the day's trades have gone through the S&P ASX 200. We'll take a look at the COB Australia Index. Probably didn't pick up quite the same amount of steam because the curtains do come down at 4 p.m., but up above that 7,000 level. I think that's important even psychologically. So really small gains, less than 0.1%. However, it does bring the week-to-date losses below that 3% level.
Yeah, 2.89 if you will, so just slightly below
and
there.
if I'm not mistaken, I think this is the first time we've seen a positive finish for the S&P ASX 200 this week.
Yeah, absolutely.
So just as a little treat before we go, found a tweet today. Now, I will admit, this guy, Ryan Detrick, he's a data guy, but he is quite bullish on equities. And I found this tweet from him who is saying, calm down, maybe the US futures are supportive of his view. Oh, it's not working, but basically this is normal. And every time we see a September like we have, market usually ends higher for the year. I'll find that for you. I'll bring it to you on Monday. You'll have to
isn't it sell in May, go away, come back in October, and then it's the Santa Claus rally and everything's fine again.
We'll see, won't we? Look, we hope you have a good weekend. Thank you so much for joining us throughout the week. If you've got any time, you can catch up online. We also will be sending out our weekend newsletter with some of our key picks. We'll see you on Monday.
See you Monday.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.